It is 9:30 a.m. Pacific Daylight Time. It's the 27th day of October, 2025, and this is episode 1198 of Bitcoin and only 2 episodes away from 1200. Wow. Kind of interesting when you think about it that way. All right, so what else is interesting today? Well, you're here for all the news that you can use and more about Bitcoin and worldwide economics, and we've got some. Trump, he's got an SEC pick. He's got a CFTC pick coming out of the Securities and Exchange Commission. MtGOX, you thought it was over. Maybe not. Then we're going to go over to the Far East to our friends in Japan who have launched the JPYC. We'll talk about it. And then India, a court case. Okay, I got to warn you about this one. Okay, it's a court case in India. I'm bringing it to you because it has major ramifications for a billion people or so. I can't remember what the population of India is, but it's clearly substantial. And India's always been kind of waffling on what they think about crypto. And that they're going to include Bitcoin in that, even though we all know that Bitcoin is not crypto. The problem that you need to watch out for is that this is not going to be a story about Bitcoin. In fact, the court case is specifically, it's about Ripple and XRP. And I know, I get it, but the import of this particular court case for the billion or so, people in India, it's important enough that I have to relax my little rule about not covering shitcoins. I'm going to have to cover this one because of what it means. Then, thankfully, thank God, we're going to be able to get back to Bitcoin and Lightning Network with the advancements in Bitcoin and Lightning wallets. It's a report that's been put out by OpenSats. They're the guys that fund a lot of open source development through grants. And they have a report as to what things have changed in certain projects like, Bitcoin Safe and Blitz Wallet and Clams and a whole bunch of other stuff. So we'll get into that one. And then BIP 444 seems to be, we'll talk about it. It's going to be important. Leaden will be in the news, and China is actually in the news. Apparently, they're very good at mining Bitcoin. I thought it was banned, but oh well. We'll get to it at the end of the show. Trump has picked Securities and Exchange Commission Crypto Counsel Michael Selig to lead the CFTC, that's the Commodity Futures Trading Commission. President Trump has selected Selig chief counsel for the Securities and Exchange Commission's Crypto Task Force to chair the CFTC. The nomination, first reported by Bloomberg, marks Trump's second attempt to fill the CFTC's top post following the stalled nomination of Brian Kentens, I can't pronounce it, a A16Z Crypto's global policy chief amid opposition from Gemini co-founder Tyler Winklevoss. Selig, who serves as an aide to SEC Chairman Paul Atkins, has been instrumental in coordinating regulatory approaches between the SEC and the CFTC on financial and crypto market oversight. The CFTC, which regulates futures, swaps, and prediction markets, is gaining greater prominence as Congress considers new crypto market structure legislation. Before joining the SEC, he was a partner at Wilkie Farr and Gallagher, specializing in asset management. And of course, Selig's appointment will require confirmation from the Senate. I'm sure everything will be fine. President Trump also recently granted a full pardon to Binance founder Changpeng Zhao, calling his prosecution part of the prior administration's war on cryptocurrency. I have no idea why they go into talking about CZ in this news story. So we've already covered it, and there's no reason to cover it again. So we're going to have a quote unquote crypto friendly CFTC chair if the Senate confirmation, goes in favor of getting this guy in. What'll it do? I don't know. I honestly think that the SEC and the CFTC will have a really good bridge between the two institutions, for lack of a better term, because of this guy. And he's, I don't know. I mean, I know the word is crypto, but yeah, Trump's administration seems to be, okay with the whole crypto thing. And it seems like it's just keeps on moving along. All I really want is for the United States to actually buy Bitcoin in some kind of budget neutral way instead of taking it from people. That's the news I keep waiting for, and I keep waiting and waiting and waiting. But be that as it may, this could be good news. If there's a solid bridge, like a good communications channel between the CFTC and the SEC on Bitcoin, then, well, like I said, it could be good. I mean, obviously anything could be bad, but I think it'll be good. I think it'll be okay. But we'll have to wait and see. And then MtGOX. Oh boy. Joy of joys, MtGOX has pushed the repayments to 2026 as the decade-long saga now drags on even longer. Adrian Zmunsky, writing for Cointelegraph, one of the world's first crypto exchanges, the now defunct Bitcoin exchange MtGOX, has again postponed repayments to creditors, this time for 1 year until October 2026. According to a Monday announcement, MtGOX postponed the customer repayments to that date. And the notice just came 4 days before its October 31st, 2025 deadline. Because if you didn't listen to me talk about it, at least I was either last week or the week before, I brought this to you that we were finally going to put MtGOX to bed. No, I spoke too soon. I had no idea that this was even on the table. But here we are. We've got another year of FUD coming for us. Every single time these idiots move a coin, every single time somebody signs a message from these MtGOX wallets, you're going to hear about it in all the major news outlets, and everybody's going to run screaming, and it's going to send prices crashing every single time they do this shit. It's just, I honestly think they keep MtGOX in their back pocket for a really good shakedown of the Bitcoin markets when it gets too hot. I at this point, there's no reason that these creditors can't be repaid in full. They don't need to push it back a year, but here we are. According to the announcement, the trustee said that while most base, early lump sum, and intermediate repayments have actually been completed for creditors who filled out the necessary paperwork, many others have yet to receive funds. Quote, as it is desirable to make the repayments to such rehabilitation creditors to the extent reasonably practicable, the rehabilitation trustee, with the permission of the court, has changed the deadline, according to the announcement. And then they go through the history of MtGOX. But then there's the question later on in this story that says, will MtGOX cause a sell-off? And then it goes on to say the large amount of Bitcoin to be redistributed was long viewed with fear by market participants, some of whom expected it to lead to a significant sell-off. Still, not everyone shared such a pessimistic view of the event. According to Arkham Intelligence, MtGOX still holds about 35,000 Bitcoin worth about $4 billion. This represents a decrease of over 75% from the 142,000 BTC it held mid-2024. So most of this stuff has already been paid. And yet, I guarantee it, about 6 months into the new year, you're going to start hearing about, oh my God, MtGOX repayments are coming up. And then boom, price fluctuations. The traders live off of volatility. They're going to get what they want. Shorts will be shorted. Longs will be longed. It's going to be a mess. And it's all because these people absolutely refuse to complete their fiduciary commitment to the creditors of MtGOX. At this point, it's been ridiculous before, but at this point, we are now 100% into the realm of malfeasance. It is the absolute worst type of feasance. There's misfeasance, there's feasance, there's malfeasance, there's one other feasance, but malfeasance is the absolute worst. It means to cause harm with intent. And that's exactly what's going on here. There's no reason this should be dragged out this long. Let's stay in Japan for Japanese yen stablecoin, which is Asia's only truly global fiat-pegged token, according to Sam Reynolds out of CoinDesk. Japan has done what its Asian peers can't: launch a stablecoin that can be circulated globally. Japan's JPYC announced today the world's first yen-pegged stablecoin, a fully redeemable digital yen backed by domestic deposits and Japanese government bonds. The stablecoin issuer said that it won't charge a transaction fee and instead generate revenue from interest on the holdings of the Japanese government bonds. Good luck. Here's what makes it stand out from regional peers. Unlike the Korean won or the Taiwan dollar, which are both onshore currencies by local law, Japan's yen is freely convertible and can be used offshore. Following reforms in the 1980s that dismantled Japan's post-war capital controls, the yen became fully usable outside of the country through the euro-yen market, where global banks and investors borrow, lend, and trade the currency with no restrictions, unlike South Korea's won, which remains confined to onshore use only under strict foreign exchange controls designed to limit offshore speculation and preserve monetary stability. There's a reason why the yen is one of the world's most traded currencies. Seoul's policy for the won preserves monetary control but leaves little room for a global stablecoin to breathe. A won-backed token would be limited to whitelisted Korean users and mostly domestic settlements, making it a niche product in a market where instant, free interbank transfers already exist. And Taiwan faces a similar bind. Its dollar is technically convertible but not used offshore. Taipei's stablecoin framework, introduced in June, mandates full onshore reserves and central bank reporting to prevent cross-border leakage. An NTD stablecoin could exist, but only on the island, stripped of all global liquidity that gives stablecoins their purpose. Hong Kong might be the exception. The HKD is pegged to the US dollar within a band, and no restrictions exist on its use offshore. Effectively, in itself, it is a stablecoin, so one might wonder why you wouldn't just use a US dollar stablecoin instead. The Bank of Japan's openness to the global use of its currency is precisely what gives a yen stablecoin real-world utility beyond Japan's domestic payments ecosystem. With interest rates rising and Japanese government bonds yielding more than 3% on the long end, the launch couldn't come at a better time. JPYC doesn't need to charge fees or chase speculative yields of its stablecoin, as it can operate sustainably off the interest earned on its JGB reserves. Pausing to say that depends on whether or not these yields stay stable, and there's no guarantee that we don't see some roiling in the markets later on, but we got to wait and see what the hell happens with the Fed meeting later on. And that should happen any time now, honestly. I think it's on the 29th is their meeting when they're going to figure out what they're going to do with the interest rate. Oh, and by the way, 98% people on prediction markets are betting that we will get a 0.25% decrease in the federal funds rate. So just keep that in mind, and it's coming, which means that you'll probably see a drop in the Bitcoin price the morning before or the day before that Federal Reserve announcement comes out. That seems to just always be what happens. So watch for that coming up. Now, the daily global FX trading volume averages around $7 trillion, reaching a record high of $9.6 trillion per day in April this year, according to BIS. As of April, the USD, United States dollar, was involved in 89% of all trades, while the Japanese yen featured in 16.85%, making the USD-JPY pair one of the most actively traded currency pairs worldwide. With both the US and Japan now regulating fiat-pegged stablecoins, there is strong potential for a thriving on-chain USD-JPY market pairing dollar and yen-pegged stablecoins. Such a pool would bring one of the world's most traded currency pairs onto decentralized rails, linking two fully reserved, regulated fiat tokens. If both sides gain liquidity and redemption depth, it could form the backbone of Asian crypto settlement and mark the start of a true multi-currency stablecoin economy. All this considered, one has to wonder if there's a demand for this. Euro stablecoins have existed for some time. The currency is designed to be supranational and used beyond the borders, but the market cap for the largest is tiny. The yen may have the legal clarity and convertibility that others lack, but whether global traders actually want another fiat-backed token beyond the dollar is still an open question. I'm going to answer it for you. It's going to be a wild success. The USD Japanese yen trading pair has been a massive thing in worldwide global trade. Worldwide global is, sorry, I said the same thing twice. In global trade, whether it's foreign exchange markets or if it's like the actual trade of physical goods, the USD Japanese yen pair is an extraordinarily important currency pair and has been for a very, very long time. Probably since the late 70s is when it really started to get some traction. But throughout the 80s, when everybody thought that Japan was going to take over all electronics manufacturing in the world, and they might have, that's when that currency pair really took off. If these people don't think that there's not going to be a market for a Japanese yen fiat-pegged stablecoin, whether or not I like it or not, and I don't, actually, it's not that I don't like it. I just don't care. I don't need this crap. But apparently other people do. We can tell that by Tether. We can tell that by a couple of other things. But this is going to be a wild success. Does that, and some people will get very, very rich trading this thing, but some people are going to have all of their lunch money stolen from them by the bully on the playground after he beats their ass into the ground and just takes their money from them because, hey, you're trading. Whether you're trading crap or you're trading equities, which is also crap, or you're trading gold, which is trading shiny metal rocks, most people are going to have their lunch money taken from them. My advice, just buy Bitcoin and hold Bitcoin. And you might want to hold a big old jar of GreatGhee. That's right, GreatGhee.com. That's GreatGhee.com, GreatGhee.com, and you're going to get some great ghee. What the hell is it? It's clarified butter. And it's made by simmering butter for a long time to remove water, milk solids, and other impurities, leaving behind 100% golden, lactose-free oil with a nutty flavor and high smoke point. Unlike regular butter, ghee is shelf-stable and versatile for cooking, baking, and even skincare. It's not only the flavor, it's the shelf stability. What does it mean? It means you don't have to refrigerate it. Ghee, if it's done right, can sit on the shelf at room temperature, be opened and closed several times, and be just fine. Doesn't go rancid. It doesn't get mold. There's not enough water in it to get mold. See, that's why you make ghee. Months and months and months. And if you never open the ghee, like, you can keep that shit for like years. Once you open it, you're going to want to start, using it, but it'll last for weeks on the shelf after you open and close it. So this is one of the reasons why ghee is really, it's a great human invention when it comes to food preservation. And if you like butter, you're going to love ghee. Use the code BitcoinAnd at GreatGhee.com. That's GreatGhee.com. That way, Mr. Ghee, first name Great, will be able to understand that I made the sale for him here on the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you that want to buy said goods and services. But you're going to buy it in Bitcoin, because if you're not selling your goods and services in Bitcoin, you ain't in the Circle P. That's the way it works. That's the way we want it. WazirX, is that how you pronounce it? WazirX is barred from redistributing XRP as Indian court affirms crypto as property. Okay, this is why I'm bringing you this. Vismaya V is going to describe exactly what the hell's going on here. Forgive me for talking about XRP. Yes, it's a shitcoin. Yes, the people behind it are complete scammers. Yes, nobody should have anything to do with this thing. But it just so happens that it was this pile of garbage that caused the Indian court to set precedents calling crypto property. Just keep that in mind, and please do me a favor and forgive me for getting into the depths of shitcoinery that is XRP. The XRP holders scored a victory in India after a court ruled that cryptocurrencies qualify as property under law, marking one of the country's clearest legal acknowledgments of digital asset ownership. The Madras High Court on Friday barred WazirX, India's largest crypto exchange, from redistributing a customer's 3,500 XRP holdings to offset losses from a $234 million hack that hit the platform in July of last year. Justice N. Anand Venkatesh said the user's XRP tokens purchased in January and unaffected by the incident could not be diluted under the exchange's, quote, socialization of losses plan. Quote, it is not a tangible property, nor is it a currency, Justice Venkatesh wrote. However, it is a property which is capable of being enjoyed and possessed in a beneficial form. The decision grants legal standing to crypto assets as property capable of ownership and protection under Indian law. It also establishes that assets held in custody by exchanges must be treated as client property held in trust. Quote, this clarity is very helpful. It strengthens consumer protections for crypto holders, affirms their rights as asset owners, and paves the way for clearer regulatory and fiduciary frameworks in the crypto ecosystem of India. Sudhir Lakshmanajara, I butchered it, I'm sorry, founder of Digital South Trust, told Decrypt. Justice Venkatesh noted the applicant had used the WazirX platform through her mobile phone from her ordinary place of residence and was prevented from trading or liquidating her holdings, establishing that crypto assets accessed within India fall under Indian court protections. Quote, together, these judgments stand among the first major Indian court decisions on cryptocurrency issues. They are foundational crypto jurisprudence. Vikram Subaraj, CEO of Indian crypto exchange Goitis, told Decrypt, quote, for all participants, exchanges, users, regulators, these are signals that the high-tech arena will be held to high standards of governance and protection, he said. The court rejected WazirX's socialization of losses plan that the judge compared to, quote, a group insurance of a self-help group. What? A group insurance of a self-help group. Wow. Quote, the basis of such a proposition is not any term in the contractual framework between the parties, making it unenforceable against Indian users, just as Venkatesh ruled. The judge also rejected WazirX's argument that its Singapore court-approved restructuring automatically binds Indian users. Oh, I'll bet that pissed the court off. Hey, we got a judgment in another country, so it's binding to you guys. Oh, really? Oh, really? Yeah, that shit doesn't fly, dude. Anyway, the ruling adds to a growing body of Indian crypto jurisprudence that defines user protections amid the government's slow regulatory process. The case follows a Bombay High Court decision rejecting similar loss-sharing measures by something called BitCipher Labs. It also arrived on the same day that WazirX restarted operations with 95.7% creditor approval. Users have so far reported receiving only 30% of expected funds amid locked accounts and customer verification delays. Crypto policy remains lopsided. Strict on revenue collection with 30% levy and 1% TDS, but silent on investor rights or asset ownership rules. Quote, ultimately, courts have become the central stage where the future of digital value is debated, the judge wrote. Through each ruling, they are shaping a clear picture of rights, responsibilities, and trust. In the age of decentralization, WazirX did not return Decrypt's request for comment. Yeah, I probably wouldn't either. So even though it's about XRP, it's about more than XRP. This precedent is just as important for Bitcoin as it is for anything, right? Because Bitcoin will now be regarded as property in India at the level of the High Court. That's a first, right? India has been flip-flopping around on Bitcoin ever since I've been in this game. So what, 2015? It's legal, it's not. You can have it, you can't. Blah, blah, blah. I mean, it was back and forth, back and forth. And this seems to be the very first time that the High Court has actually said, you know what? Bitcoin is your property. Even though they're talking about XRP in this piece, Bitcoin is now officially property, personal property that is legal to be held by the citizenry of India. That's about 1 billion people. Let's run the numbers. CNBC futures and commodities. I got Brent North Sea oil up 0.06% to 65.98. West Texas Intermediate is up 1/4 to 61.66. Natural gas is up 3.12% to $3.40 a thousand, and gasoline is up 1/4 to $1.92 a gallon. Murban crude is in the red. It's the only thing in energy in the red today. 0.94% to the downside, 68.26 a barrel. Shiny metal rocks, getting kicked in the rocks. Palladium down 3.12%. Gold down 3.08%. Peter Schiff cries as gold goes below 4,000, only to pop back up like a bad habit, $4,011 and a dime. Platinum is down 1 1/4. Silver is down 3.85. Still hanging in there at $46.70 an ounce. Copper is the only thing in the green, 1% to the upside. Okay, now I got pretty much mixed results in ag. Biggest loser today is, sugar is down 3.14%. Biggest winner is wheat, 3.22% to the upside. And then we got live cattle. Oh, shit. Dudes, live cattle is down 4 1/3. All right, look, I give you guys the cattle prices all the time. And I go through energy, rocks, livestock, indices. I do this for a reason. The cattle prices, live cattle or feeder cattle, it doesn't matter. Live cattle is what you take to go get slaughtered. Feeder cattle is what you buy in to feed them so you can turn them into live cattle so that you can sell them as live cattle so they get slaughtered, and that's the meat that we get. Anyway, aside from that, cattle prices on both ends of that have been at all-time highs. I mean, busting the ceiling. And then Trump makes that statement last week that says, we're going to start buying a shitload more beef from Argentina. And that goes along with that. We're going to bail them out for $40 billion or whatever it is. We're going to buy their crappy ass Argentinian dollar or whatever the hell they call it, because their freaking economy is in free fall again. No matter what, no matter who gets elected, no matter who's in charge, no matter what they do, Argentina is just, it is financial, I don't know, it's a financial masquerade is what it is in either event. Ever since Trump said those words, the all-time high cattle prices have been falling like a SpaceX rocket back to Earth. Lean hogs aren't escaping either, 0.43% to the downside. Feeder cattle are down 4 full percentage points. That's not going to make the cattle ranching people very happy. And you want to bet who a lot of the cattle ranchers elected when they went to go vote? They wanted Donald J. Trump to be president. Not all of them, but a lot of them. They're not happy right now. And it doesn't matter if us as the consumers happy or not. I'm just looking at it from midterm elections standpoint. They're going to be so pissed if these prices don't correct for these people, they're going to be angry. Whether or not it actually hurts them in the future is not something I even want to discuss right now. That's not the point. The point is whether or not they get hurt in the future because of this, they all of a sudden they have to sell their rent. It doesn't matter. They're still going to be pissed. They're still going to be pissed. And it's going to show up in midterm elections. I'm not sure what this administration is doing at this point. They're pissing off farmers. They're pissing off ranchers. They've already pissed off the Bitcoiners. And it was all of us together who got that dude elected. I'm sorry, but this is the case. And that administration is now pissing off its voting base. The midterm elections, if they don't reverse course or do something fucking spectacular, it's going to be a bloodbath. So just y'all be careful out there. All right. So $115,520 gives us a $2.3 trillion market cap on Orange Coin. And we can only get 28.9 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,940,560 and 1/2 of. Average fees per block remain low, 0.02 BTC taken in fees on a per block basis. And there are 40 blocks with about 111,000 unconfirmed transactions waiting to clear at high priority rates of 2 sats per BByte, and low priorities get you in at 1. And new all-time high for hash rate, ladies and gentlemen, introducing 1.13 zettahashes per second. That's all the security on the Bitcoin chain that you will ever need. Now, from Scary Coin, which was Friday's episode of BitcoinAnd, I got Psyduck with 757 sats, says Psyduck. Jay with 1,300 says, thank you, sir. Saluting emoji. Thank you. Thank you for understanding that my operating system is so old, I can't see the new emojis anymore. Wow. God, I need to get over to Linux. God's Death with 237 says, thank you, sir. No, thank you. Jason High with 500 says, there are a ton of bells here in Florida. Maybe the accepting Bitcoin can help orange pill my wife. Not exactly sure what that means. It's probably just because it's going over my head. But we'll continue with Axelrod with 5,000 says, nice long form podcast. I would be into sown flour from their store as I am a sourdough maker or baker. I'll be listing for nursing family farms in the Circle P. And he spells it Kirkle. Curcke. Kirkapee. Kirkapee. I love you guys. Bitcoin Sandy with 500. Bitcoin for President with another 500 says, great show as always. Thank you for your podcast. I enjoy them and appreciate your diligence. And let's see. Oh, and that's it. Yep, that's it for the weather report. Welcome to part 2 of the news that you can use. Yeah, I just recorded an entire section about the advancements in Bitcoin and Lightning wallets because of OpenSat's, their grants and whatnot. But that entire section I don't know what happened to it. It just got destroyed. So I'm going to have to move on because I got other stuff to do. So I'll bring back that maybe tomorrow or something like that. But let's get on into the rest of the news for the day. BIP 444, the temporary soft fork dividing developers and the community. This is from Atlas 21. The Bitcoin community finds itself at the center of a debate surrounding Bitcoin Improvement Proposal 444, a proposal aiming to implement a temporary soft fork to limit the amount of arbitrary data that can be included in time chain transactions. So this whole knots versus core versus filters versus ordinals versus arbitrary versus economic data, it's not going to go away. So here we are. The controversy emerged following the release of Bitcoin Core V30 this month, which removed the maximum data size previously allowed via op return in standard transactions. Despite the discussion that preceded the launch, adoption of the new software has been slow, according to BitNode's data. Currently, 6.5% of reachable nodes are running version 30. Yeah, good. People don't, honestly, you should not upgrade your node to the newest, latest, and greatest version of Bitcoin ever. You should wait 4 months. Make sure that there's no bugs in it. There's no reason whatsoever to upgrade no matter what. I'm still running 29, right? And before that, I was running 28. And I had run 28 for a long time. 29 had been out for months and months and months before I finally upgraded to it. Don't think that you have to upgrade immediately. That's not the way Bitcoin is required to work. Anyway. BIP 444, the proposal, published on October the 24th, stems from concerns among some Bitcoin community members about potential legal risks for node operators. Oh, God. The main fear is that illegal material such as child sexual abuse content could be uploaded to the time chain, creating legal liabilities for anyone running a full node. Quote, if the blockchain contains content that is illegal to possess or distribute, node operators are forced to choose between violating the law or their conscience or shutting down their node, the proposal document states. Quote, this unacceptable dilemma directly undermines the incentive to validate, leading to inevitable centralization and posing an existential threat to Bitcoin's security model, it reads. On line 261, the document declares that, quote, there is a moral and legal impediment to any attempt to reject this soft fork. Then, from line 270 to 272, the document continues, quote, rejecting this soft fork may subject you to legal or moral consequences or could result in you splitting off to a new altcoin like Bcash. However, strictly speaking, you are free to choose, end quote. I'm going to pause right there again. This is bullshit language, and whoever wrote it should be ashamed of themselves. Why? It doesn't matter if it's true or false. The language is specifically selected. If I'm looking at this from a rhetorical standpoint, it uses fear. And anybody that uses fear against another human being is the low-life fucking scum of the earth. This could be Luke Dash Jr. writing this. I don't know. I literally don't know who's writing it. And I don't need to know. This could be Adam Back. It could be anybody that we would regard as the centurions of, the main guard of Bitcoin, and I still don't care. The use of fear against your fellow man results in you going to hell. You want to talk about a moral or ethical dilemma? Try that one on for size. You piece of shit. Okay, so technical details. According to the terms of the proposal, the soft fork would implement several technical restrictions. One, op return outputs would be limited back to 83 bytes. Most other script pub keys would be limited to 34 bytes. A limit of 256 bytes would be imposed on individual data push sizes. Unused or undefined script versions would be invalidated. A maximum size would be introduced for Merkle trees embedded in Taproot outputs. And finally, op_if would be banned within TapScript, effectively removing the ordinals inscription method. I got to pause again. It may sound like a good idea to some people, but the way this is being rolled out, it's almost as if, hey, since we're here, let's go ahead and take care of all that ordinals crap. We've had ordinals for 2 years. I don't like ordinals. I've never bought them. I'm never going to buy them. I think it's worthless. I think people that spend their money on it are just, you might as well burn it. You might as well burn your money. But we've had it for 2 years. This is not that big of a deal. What's a bigger deal is making changes like this in a haphazard way and then use the language of fear to drive people to use it. Everything about this is wrong. I'm sorry. If they had just gone another rhetorical route, saying here's the specs. We ask that you look at it. We ask that you look at this because you may want to run this soft fork. Okay. I'm good with that. You can do whatever the hell you want. But telling me that if I don't run this, that I'm some kind of ethical or moral degenerate? No. From an ethical and moral obligation, I will not ever run this soft fork because the creators of this soft fork are relying on fear. One of the most negative, the most base human emotions. Not going to have it. These changes would result in a soft fork where transactions previously considered valid would become invalid. However, the proposal specifies that this modification would only be temporary, lasting approximately 1 year. Oh, we're temporarily closing the gold window. Taking a little page from Nixon's book, are we? This period would allow developers to evaluate and implement alternative approaches for managing arbitrary data on the time chain. The proposal was written by Darthon Ohm, an account created on GitHub and X just a few days before publication with no apparent prior history in Bitcoin development. Luke Dasher, a well-known Bitcoin developer and outspoken critic of ordinals, expressed support for the proposal, stating on X that it is, quote, already on track with no technical objections. Dasher noted that, quote, it isn't intended to be an ideal solution, only good enough and super simple to buy time to design a long-term solution, end quote. These people are insane. I'm sorry. I really don't have that many problems with Luke Dash Jr. I've had some, a couple of, very short conversations with him on Twitter, and he seems okay, but he's just gotten, over the past year, it's gotten, I don't know, man, something weird's going on with that dude. And some of these other people are just, I don't know, man. I'm staying with 29. Version 29 is good for me, ladies and gentlemen. But anyway, critics of the proposal argue that arbitrary data has existed on Bitcoin since the Genesis block. Yes, it has. That whole, in the Genesis block itself, where homeboy Satoshi put in the headline of the newspaper, the London Times or whatever it was, Chancellor on brink of second bailout, arbitrary data. It's arbitrary data. He did it himself. Right? It doesn't mean that you have to accept it or you have to love it, or you have to hate it. It doesn't matter. You got to make up your own mind on this stuff. But I cannot believe that we have sunk to using fear and the threat of legal ramifications, a moral burning in hell, or some kind of ethical delusion that people are under that would force them to somehow or another be responsible for hurting children because of Bitcoin. If I didn't know any better, I'd say somebody got to a whole bunch of people and are literally trying to rot the soul of Bitcoin from the inside out. Am I going to sell my coins? No, dude, I'm not that reactionary. That's exactly, even if I'm right. And believe me, that's a long shot, dude. I mean, that's tinfoil hat area right there. Even if I was right, it's not going to work. I'm just saying that there are forces out there that literally don't want this to work. They don't like Bitcoin at all. And apparently, all you really got to do is just pay somebody a lot of money and they'll start talking about Zcash on Twitter. So God only knows what else is capable, what these people are capable of. Anyway, sorry, I keep getting into these sidebars, but last September, Leonidas, a prominent figure in the ordinals community, stated that miners and mining pools representing over half of the network's hash rate had confirmed that they would accept any consensus valid transaction with appropriate fees. Quote, "There is no meaningful difference between normalizing the censorship of JPEG or meme coin transactions and normalizing the censorship of certain monetary transactions by nation states," Leonidas wrote. Quote, "Both would set very dangerous precedents." Peter Todd, a Bitcoin developer, stated on X, and he said, and they've got this quote here, and he says this: "BIP 444 creates a C scam attack where you use censoring reorgs to double spend." He's replying to a BitMEX research tweet that says, "The BIP 444 proposal is incredibly bad. A bad actor who wants to conduct a double spend attack could put CSAM on chain to cause a reorg and succeed with their attack. The proposal therefore provides an economic incentive for on-chain CSAM," which is, I don't know, child sex abuse material, I think is what it stands for. Dude, Jameson Lopp, co-founder and chief security officer at CASA, raised several criticisms of the proposal. Lopp pointed out that the document does not define what content is legally or morally objectionable, and highlighted that legal experts disagree on what liability node operators might face. Quote, "By running a node, you consent to the consensus rules of the network. If you don't consent, you can simply not run a node," Lopp wrote in a comment. The proposal has not yet been submitted to the Bitcoin development mailing list, a required step for BIP drafts to gather further feedback before pursuing any serious path towards consensus. This needs to die right here, and it's not because I'm defending ordinals. Everything about this raises the hackles on my neck. All the way from the fact that they use fear as a major component in the language as to why you need this, all the way to Peter Todd himself actually looking at this and saying, and BitMEX research saying it's a potential double spend attack. Everything about 444 needs to be forgotten. All right, so I mean, it's like you do whatever it is you want to do. But you've heard what you need to hear. I highly recommend that you go do some further research on 444. I will as well. But everything that I've seen so far, this gives me the willies, dude. So let's get into something better. Ledn, Ledn post a record Q3 lending volume as its Bitcoin-backed loan originations surpass 1 billion. That's billion with a B for the year of 2025. And that's just so far, by the way. So let's get into this one. James Hunt is writing it for the block. Centralized Bitcoin lender Ledden generated record lending volume during the third quarter, adding $392 million worth of loans. That nearly matches its total activity of all of the year 2024. Kind of amazing, really. As a result, the private firm has now surpassed $1 billion in Bitcoin-backed loan originations year to date and exceeded $100 million in annual recurring revenue. Quote, "This has been a breakout year for Ledden," co-founder and CEO Adam Reed said in a statement shared with the block. Crossing the $1 billion mark in loan originations year to date underscores the growing demand for responsible Bitcoin-secured credit and our commitment to transparency and trust. Alongside the record quarter, Ledden also released its 10th proof of reserves attestation completed by the network firm LLP. The network firm, I guess, is the name of this company. The network firm LLP as of September 30th. For the first time, the report disclosed the full size of its loan book, $836.2 million, and an aggregate loan-to-value ratio of 42.68%, offering greater visibility into the company's lending activity and collateralization levels. So they've got a little bit more, if I'm reading this right, they have a little bit more than a little bit more than twice the amount of Bitcoin than the loans are actually valued at. So they've got a lot of headroom for Bitcoin's price to go down. In fact, at this point, it can go down like 50%, and most of these loans will still be collateralized. Past that, you start getting past that, it gets a little dicey. But hey, I mean, if the Bitcoin price dropped to, what would it be, 55, 57, let's just call it $59,000, nobody gets liquidated out of Ledden. Because they're going, dude, like, I'm going to make you got 100,000 in Bitcoin, I'll give you a loan for 50K. That's what this basically means. So these guys are so well over collateralized, they're probably sleeping very, very well at night. Just saying. Continuing, since its inception in 2018, Ledden has now originated over 2.8 billion in loans, providing services to clients in more than 100 countries who use Bitcoin as collateral instead of selling it and incurring a taxable event. The crypto lending niche suffered significant setbacks following a tumultuous year for centralized services in 2022. Might I say the names BlockFi, Celsius, Genesis, and of course Voyager Digital. Following those events, which they all went bankrupt, just in case you did not know, it remained unclear to what extent users would trust such services going forward. Ledden co-founder and CSO Mauricio Di Bartolomeo, so I hope I didn't butcher that, previously told the block that the company survived the period because of its sound risk management program and prioritization of the safety and security of client assets. On Monday, the firm said that the key to its staying power, growing to become one of the largest retail-backed Bitcoin lenders in the industry despite volatile conditions, comes down to its simple, transparent, and compliant approach. Quote, "We've built Ledden to serve long-term Bitcoin holders who want to preserve and grow their wealth responsibly. Our business is designed for transparency and resilience, not speculation." Ledden dropped ETH support in favor of becoming Bitcoin only in May of this year, also discontinuing the lending of client assets to generate interest to eliminate third-party credit risk as it moved to a fully custodied model. In August, Reeds told the block that his belief in Bitcoin as a reserve asset is rock solid, but said it's unrealistic for Bitcoin digital asset treasuries to expect returns comparable to strategies. And he's talking about what was formerly MicroStrategy. The guys at Ledden have survived everything since 2018. Do you know what it's like to survive in Bitcoin since 2018? It's like being in a minefield. And here's the thing. We're not at the other end of the minefield yet. We got a long way to go. And it's probably going to go through China at one point. And despite all the huffing and puffing that our Far East, friends over there in China have done, China remains the third largest global hash rate provider for the Bitcoin network, despite 100% mining ban. If you did not know, it is illegal to mine Bitcoin in China, yet they rank number 3 in global Bitcoin hash rate. Alex, Larry, BitcoinNews.com, take us out. 4 years after banning digital asset mining and transactions, China has quietly become one of the world's biggest Bitcoin mining centers. Despite the 2021 ban, new data from Luxor's global hash rate map shows China accounting for 14% of Bitcoin's total hash rate, with 145 exahashes per second, third in the world behind the United States and Russia. In 2021, the Chinese government launched a broad crackdown on digital assets, including Bitcoin. The PBOC, or People's Bank of China, outlawed all digital asset transactions, citing financial crime, fraud, and the potential instability that digital assets could bring to the national economy. Mining operations were quickly targeted and then shut down, but the miners never went away. Now, many moved their equipment to remote areas where enforcement was weaker. Xinjiang, with its cheap and stable energy, reportedly became the prime location for these secret operations. Well, if we know where you are, not that good of a secret. Anyway, industry insiders now believe much of the country's underground mining is still thriving in Xinjiang's remote areas. According to a fourth quarter 2025 global hash rate map, the country's share of the world's Bitcoin mining power increased slightly from 13.8 to where it stands at 14.05% today. Data from Hash Rate Index also shows this trend. The U.S. still leads with about 37.8% of global mining. Russia follows with 15.5%, but China is a strong third, even though they banned Bitcoin mining. So experts say that it's impossible to fully suppress mining as long as one has the electricity, internet connection, and the necessary hardware. They can compete in the global Bitcoin mining race. Many believe enforcing the ban is difficult on the outskirts of big cities, and that has contributed to why China's hash rate continues to exist. Energy is still the biggest lure. Xinjiang's grid and geography are perfect for secret mining. Small operations often run quietly, sometimes using renewable or surplus energy to fly under the radar. Despite the risks of government penalties, many believe the rewards are worth it, especially with Bitcoin over $110,000 a coin. China may have banned domestic mining, but it still rules the global Bitcoin mining landscape. Over 95% of the world's Bitcoin mining machines are made by Chinese companies like Bitmain, MicroBT, and Canaan. This manufacturing dominance gives China indirect control over most of the world's Bitcoin mining. Most of the equipment, spare parts, and technical expertise can also be traced back to China, and this means even miners overseas are still heavily dependent on Chinese gear. This has raised national security concerns in the U.S. Sanjay Gupta, chief strategy officer at Auradine, said over 1 million Chinese-made Bitcoin mining machines running on foreign firmware are connected to the U.S. power grid. He cautioned that this could pose a potential serious cyber attack risk if compromised systems were ever triggered in a coordinated attack. The U.S. government has already taken notice. Tariffs on Chinese mining hardware have been introduced and may rise to as high as 155%, according to reports. Officials argue that reducing reliance on Chinese-made devices is crucial for energy and infrastructure security. Still, some experts caution against overestimating the threat. Khan Farhani, a research associate at Luxor, explained that the global hash rate map primarily aims to determine how Bitcoin mining activity is distributed around the world rather than track ownership or intent. He noted that Luxor is not aware of any security issues or threats related to China's mining operations. Connected to the electrical grid is, okay, look, no. It doesn't really work that way, right? So they're connected to the internet and to a country's power grid or a regional power grid. It doesn't really matter. There's the transformer or the power supply that you plug in, but then there's also the network connection that you also plug in. Sending instructions to jack with the electrical grid would really only ever come through the internet. And honestly, that's a little bit more overblown than people think. It's not that it's completely impossible, but it's a very difficult prospect. What I don't want anybody to come away from, from this thinking is that somehow or another, because it's connected directly to the electricity, the electrical load, directly to transformers and power generation, through the fact that it's, like its copper is connected to the copper that's coming into your house that feeds all the energy of your house. And you're not going to send instructions to destroy something that way. All right. So I just want to be clear. It doesn't work that way. Now, is it bad enough that there could be compromised firmware that is connected to the United States internet? Sure. We've been through this before, and we'll go through it again. And right now I'm speaking to you through the internet, and everything is going to be fine. So take a deep breath, research BIP444, and I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.